Yeah, look, they said that I couldn't do it, so I went and did it. W's only, you know I've been winning. Top of
How to choose the right life insurance policy. I know we panic. I know we're told which one we should have or which one would work best. But what I challenge you to do today is understand first what insurance is. Insurance is simply something you utilize to transfer risk. And I believe everything in life comes down to risk taking, but also understanding how to take calculated risk. Choosing the right life insurance policy is very important because you first have to understand why life insurance is important. What you have to understand here, it's not a religion, it's not politics. It is something that we truly need every single American to become more accustomed to, because you cannot leave a parking lot with a brand new vehicle without insurance on that vehicle. You cannot buy a house and leave closing without ensuring that there's insurance on these homes. And when we buy the most important thing we believe, which are our phones, we don't usually leave without getting insurance on that phone because of the risk of losing that phone. So my question to you today is, why is it that it's not mandatory to have the most important asset, which is ourselves, properly insured? Because when sickness knock on the door, when old age knock on the door, when disability knocks on the door, you can't take money from that house to cover down without suffering those penalties and losses. You can't take away from your car insurance to cover down, but they never show us how to properly pick the right insurance plans that prepare us if life happens and also prepare us if life does not happen. I always say it's better to need it and have it rather than need it and not have it. And there are different types of life insurance. There's permanent life insurance and there's also temporary life insurance. But let me show you how to leverage the right life insurance. Having a term policy is for you to be able to leverage in the time of need when you have kids, you have debt, you have a home, and you want to insure your debt at the time because your finances are not where you need it to be and you can only afford but so much, but you have things and priorities that you need to have in place just in case. All right, which is making sure you have the right amount of insurance to insure the debt. So if sickness knocks on the door, if life unexpectedly happens, you don't put your family in a position to be stressing about you getting sick or you passing away and they don't have any plan in place. So it's better to need it and have it rather than need it and don't have it. So getting temporary insurance is for the person who is not where they need to be financially, but they have debt, they have kids, and those are priorities, and you want to make sure you don't become a burden to your loved ones. So make sure if you're going to leverage a term policy, you understand you do not put the cheapest policy on the most expensive asset. You are the most expensive asset when it comes to your family, right? Because if you get a term policy for temporary time, and now that policy expires, you now have to backtrack and think about your age and how much more expensive it's going to be. But you also have a term policy with no living benefits. So when you're stepping into a place where you're getting a policy, make sure you're getting it so where you can utilize it while you're living, if you can qualify, which means you're getting a term with living benefits. Meaning if you get cancer, diabetes, or stroke, you get anywhere you're terminally ill, less than 12 months to live, you have something you can leverage while you're here. On the permanent side, this is where it gets really serious and you get to determine which options are best for you. You have whole life, you have index universal life, and you have universal life. Each of these strategies plays a very crucial role when it comes to life insurance and cash value. A permanent policy, which I just listed on those different accounts, they can grow cash. A term policy does not grow any cash. Once that policy has matured, there's no cash unless you have a policy that is a return of premium that will give you back all the money that you put into the policy if that time comes and the policy has now matured. On the permanent side, once you take care of this policy, you will have it for a specific time, whether it's 100 years old or beyond 100 years old, depending on the product you leverage. When you get this plan that you're leveraging to build cash, you have to truly understand how this works. It's a breakup. The insurance coverage is different from the cash value, so you have the opportunity to leverage two benefits in one account. You also are able to access features of a permanent plan. So you're able to grow cash in this policy now, where you get the opportunity to utilize it to fund an emergency if something happens, right? You don't have to take out major loans and pay back major interest, but you're able to borrow those loans and pay back, the interest on a timely manner and not be penalized or affect your credit. And at the same time, you're able to leverage that cash buildup to create more opportunities for your future. So as you're building this and as you're growing it for your future, you also have the opportunity to transfer this legacy to your loved ones, right? With the buildup of the cash inside based upon the product you're leveraging, and be able to tie that into your death benefit to give it to your loved ones. So you truly have to know the different areas of insurance plans and how to leverage them for your best interest when it comes to your financial goal. And I always explain to individuals that insurance is the biggest financial security when it comes to you building a financial portfolio. Insurance is a part of your financial planning, because there's so many things that you can leverage insurance for. And I'm not just talking about one specific insurance, but I'm talking about the right insurance. The best insurance for anyone is based upon their financial goals and their financial terms that they want to hit. And then you find the specific financial policy that is good for you, which insurance is also a part of that plan. So if you're not where you want to be financially, yes, leverage a term that you can simply convert later within 1 to 5 years to a permanent strategy, and you can have those benefits if you can qualify again. Or if your finances are where it's supposed to be, how can you align a policy that grows cash inside of your actual portfolio so you can build your portfolio and have multiple asset classes inside of your financial portfolios? And most financial professionals will not explain this because there's no money management, and it takes a lot to explain for you to learn, but it also has big commitments and discipline to it. So make sure you understand that the right insurance plan for you is going to come down to your financial goals, and the vehicle you get into is going to take you to the destination that you want to get to. So there's no right or wrong policy. It's just the best policy for you, and you have to choose right. But choose your financial goals first before you choose a life insurance policy. Stay blessed and be blessed.